Aaron's already talked about a lot of interesting things that have been going on with these markets, and of course, the corn and soybean market hits cattle and hogs uh, pretty heavy. It's just been, whether it's trade issues or domestic issues, um, things have definitely been in for a wild ride here as of lately. Uh, just in summary here up front, I've got a question mark here on the very first bullet on profitability for low cost cow calf producers. Um, I say that because I can guarantee you, if you're very high cost, you're not going to be making any money this year as a cow calf producer. And I'm not even sure low cost cow calf producers are going to be profitable. And I say that, there's a lot of decisions that are made throughout a year, and we had the July 1 cattle inventory report that came out and said we pretty much had the same size cattle herd as we did July 1 a year ago, which means in a lot of cases we've stopped our growth uh, or expansion phase of this cattle herd. But in reality, our cow calf producers have not really experienced lower prices yet. Most of our cow calf producers are going to calve in the spring and market in the fall, and that marketing time period is generally September through November. And so a lot of those people have really not experienced how low these prices really are. And if they don't watch the markets every day, or at least on a regular basis, they're going to, it's going to be a rude awakening the next month or two as they haul these cattle off and find out that it's not nearly as peachy as it was a year ago. And a year ago, they weren't too happy. But, I ran some numbers on last week. Weekly auction markets, a 525-pound steer sold for essentially $700. 525-pound heifer, essentially $640 a head. And I think 525-pound bull calves were 660. So 700, 640, and 660. There are some opportunities for margin operators, and that's just because when calf prices go down, if their output price goes down, that's okay too. If they're getting inputs bought cheaper, corn prices are lower than what we expected, so that's helping in the margin side. And there also is just going to be a lot of meat on the market domestically, and that's why the international markets are pretty important. So here's what we've been looking at on slaughter cattle prices. You see that sudden decline on that solid blue line, which is 2019. We're very, very far below the 5-year average, but that 5-year average contains all those really strong years, the 14, 15, and part of 16, where cattle prices were extremely high. But that sudden downturn last week all comes from the Finney, the Tyson facility in Finney County, Kansas, which harvests about 6,000 head of finished cattle a day. So they harvest about 30,000 a week, and we only harvest maybe 550,000 head of finished cattle every week, and they're 30,000 of that. So they're six or so percent of the weekly harvest. Based off of what we know, they had a fire in their box facility. Blah blah blah. It's terrible, doom and gloom is what Tyson says. And I'm not so sure that's the case, but I'll talk more about that as we move forward. Let's just get a quick glimpse of where cattle prices are. Here's your 5 to 6 weight steer prices in Tennessee. Like I said, a 525-pound steer only averaging, I think it was actually $706 per head is what they averaged last week. So that doesn't mean that there aren't people that didn't get more than $706 a head, but there were also people that got less than $706 a head on a 525-pound steer based off of quality mainly. But at $700 a head, I think it's really tough to say a person's making much money in this business, you're definitely covering your cash costs, but you can't afford to own the 3 tractors and the complete hay complement and you know, the $60,000 truck and $15,000 cattle trailer with 50 cows or even 100 cows. So really tough right now from that standpoint. And worse than that is we're fixing to come up on that seasonal softening of these calf prices anyway. So as we move into the September, October, November time period, that's when our prices for these lightweight calves tend to be the lowest. October generally is the lowest price. But we'll see, because I just don't see that getting back over $1.40 is in our. I don't think that's in our near future, really. We'll see how it turns out. Yearling type cattle, of course, this is weekly auction market, so this isn't truckload lots, but most of the cattle that are 700 pounds or heavier in this state actually are marketed through truckload lots as opposed to through the weekly auctions. But they took a hit as well. You know, cattle feeders, when they take a hit on finished cattle prices, what is their option or their alternatives? Well, it's pay lower for feeder cattle. So the same, we had the Tyson facility fire was on Friday a week ago. So that 10, 11, that's, well, we're coming up on 12 days, I guess. It was 12 days ago. And so on that Monday, following that fire was also the time when all the crop information came out, Aaron. And, you know, I thought, well, I really hated that it was coming out at the same time because I wanted to see what the impact of the facility was going to be on the futures market. Well, feeder cattle and live cattle both went limit down on Monday, which live cattle, that's $3 a hundredweight, and feeder cattle, that's $4.50 a hundredweight. And then on Tuesday, those limits actually get expanded, and so live cattle dropped on Tuesday. Now this is a week ago Tuesday, not yesterday. Another $4.50, so that was $7.50 in 2 days. And then feeder cattle, not all the feeder cattle contracts dropped the limit, but they dropped a lot of them between $6 and $6.75, because $6.75 is the expanded limit. So you take $4.50 and $6.50, and you get $11 in 2 days on feeder cattle. Then we get this nice report from the corn standpoint. I mean, if you're a corn producer, it's not a nice report, but if you're a cattle producer and that's all you do and you're trying to feed corn, we get this nice report that drops corn prices to the limit of 25 cents, softens soybean prices as well, and then corn goes down probably another 17 or 18 cents on Tuesday, and yet feeder cattle prices still drop the limit, you know. So evidently we think the information of the fire is much worse than any of the good positive information that came from lower corn prices on feeding cattle. And corn prices have remained down. They bounced back a little bit, and feeder cattle prices have bounced back just a little bit, but we're still not to where we were prior to the fire. And so, you know, it's hard to get inside a trader's mind all the time to know what's going on. I do think these yearling cattle prices will bounce back more so than those calf prices will, because we still have a seasonal strength through parts of September, and maybe if you look at last year, we got even into the middle of October, third week of October, before cattle prices started playing out on these yearling cattle. It's generally about the middle of September. I had an email just the other day, actually I guess yesterday, about these slaughter cow prices. Well, do you think these slaughter cow prices are going to go up anymore? Well, I mean, the only way I know to answer that is no. You know, this time of year, we typically see these slaughter cow prices start to decline. Well, we've just had a really strong year for slaughter cow prices. There's been a strong demand for 90% lean beef, and that's why slaughter cow prices have stayed up. If you've got them, get rid of them. You know, there's no sense in maybe, I mean, if you've got calves, you're saying, well, I got these calves on them, I got to wait. Well, maybe just early wean the calves, because right now, with slaughter cow prices sitting around 60 cents, 55 to 60 cents, that's a really, really good salvage value for for cows that need to be exiting the breeding herd. Just a thought to throw out there. But let's talk about slaughter. Heifer slaughter up 7.5%, steer slaughter down 1.5%, and beef cows up 1.9%. Beef cow slaughter has actually slowed down since the last time we had this meeting. Heifer slaughter has slowed a little bit since the last time, and steer slaughter has actually picked up a little bit. We're still down 1.5% year to date on steer slaughter, but the past month or so we've been above year ago slaughter. So steer slaughter is starting to pick up slowly, and heifer and beef cow slaughter is slowing down a little bit the past few months. But you can see that we probably aren't expanding this cattle herd. That's not to say that when January 1 shows up that we don't have an increase in total cattle numbers of a very marginal amount. But we are thinning out this herd because we're starting to have a few people that realize that these cow prices aren't what they were. So this has resulted in beef production being up 0.6%. Pork production is up 4.4%, and broiler production is up 2.1%. It's just a lot of meat. I mean, we're talking about our annual beef production probably being around 26 billion this year. Pork production are 26 to 27 billion. Pork production the same, and then broiler production is probably in the 45, 46 billion pounds of meat. We've actually had fairly strong pork exports. I say that relative because China has started importing a little bit more pork because of the African swine fever situation. Actually, what they've really been doing is starting to import more beef from other countries. So we're starting to see a pickup in the beef imports by China. Now, it's not from us. They're not importing a whole lot of beef from us, but if they're picking it up off the market somewhere, that gives ours a place to go in a lot of instances. So the reason for those increased meat imports into China are because of the African swine fever. I mean, China's been known as a pork-eating country for years and years, but they are starting to get a little taste for beef. But we're just going to have a lot of meat to eat somewhere, try to get rid of. So let's look at our trade. We have had really, really strong beef imports up until June. That's the latest data we have. That was because we were able to buy a lot of processing beef. So in other words, grinding beef at a very, very cheap price. Our economy, people can complain about our economy, but our economy is actually fairly strong relative to a lot of other economies right now. And so when you have a strong dollar, it gives you really good buying power. And when these other countries, especially places like Australia that are still struggling with drought to some extent, you import their lean grinding beef, you put it in a hamburger at McDonald's, and you carry on. Now, I guess McDonald's does have one beef item now that is all fresh. I don't think they're using all fresh meat and everything, but what their Big Mac or their quarter pounder or whatever they eat, I don't know which one it is, but it's all fresh meat or something now, which changes logistics. But there's still a lot of these facilities using frozen beef coming in, and I don't know that any of us can really tell a difference. If you can, kudos to you. Exports. We finally, the past 2 months, we've been back to year ago levels of exports. This year exports have still really been strong the entire year, the first 6 months of the year. It's just the first 4 months we say, well, they weren't that strong compared to last year. Well, that's because last year's were really, really, really strong. So exports have continued to pull their weight in maintaining this beef market. So that there's nothing really to complain about. And May and June were 2 really good months. I think based off the weekly data, July's not going to be too bad. We'll see how that turns out because nothing there is guaranteed. Meat prices, just we saw that the first slide with the finished cattle prices or the slaughter steer prices, we had that a direct decline in slaughter cattle due to the fire. That fire also caused boxed beef prices to rapidly escalate. So in essence, you think of yourself as a Tyson And yes, you have this facility that had some type of burn damage. And yes, it is a facility that harvests 6,000 head a day. But all of a sudden, their margins improved over $100 per head. So now a lot of these packers are making $350 a head for every animal that comes through the facility. So you go from $250 to $350, and all of a sudden you're making a lot of money. So that's, Tyson has an incentive to, they hadn't been very forthcoming with the information on how quickly they can get, first it was some of the county personnel there in the state, some of the county personnel in the state said, oh, the fire wasn't really that bad. It was very well contained. It did take a little while to put out, but it was contained, blah, blah, blah. Well, then Tyson says, oh, it's going to take months, to fix this facility, to get it back in operation. Well, when in 2 or 3 days, when this right here is what happens, you're getting to buy cattle cheaper, and then your output, the product that you're producing, escalates tremendously and gives you another $100 per head margin everywhere else you're killing cattle, because Tyson is the biggest harvest. I mean, they harvest more finished cattle in this country than anybody else. All of a sudden, all their other facilities, every head that goes through there is making an extra $100 per head. You have an incentive to not be completely truthful or forthright. And considering this was in their box facility, I don't know why the whole facility would have to be shut down. I would feel like they could continue to run certain operations, and even if they can't run at full capacity, I would think in a few weeks they could have the facility back up to being able to harvest 1,500, 2,000 head a day, and carry on. But if margins are really good, there's an incentive here again. I'm not saying they're untruthful. I'm just saying we all respond to incentives, and this is their incentive right here. So you can take it or leave it for what it's worth. We're starting to hit a few drought situations out in the Southern Plains. It's not uncommon this time of year. All of it's pretty short-term type drought, but it is impacting the grass situation out there. It will impact a lot of wheat country, because a lot of those areas are looking to get wheat in the ground pretty soon. And so if they can't get wheat in the ground, that'll just cause these calf prices to fall even further. I say they can't get it in the ground. They won't have any problem getting it in the ground. They'll just be having a problem of it actually getting started if no moisture comes through the Southern Plains, where wheat grazing, winter wheat grazing is prevalent. So we'll see how that plays out. But we've been in really good moisture conditions through most of our state. It continues to be pretty good. I know there's dry pockets. A lot of folks in East Tennessee are needing some moisture now. And I know there's places in Middle Tennessee that still need some moisture. I'm sure the same is in West Tennessee, but haven't had very many reports from that side of the state. Overall, pasture conditions are pretty good. Who really knows what corn prices will do? We hear all the doom and gloom from the country, but then all the USDA reports say that things are just dandy. If you're feeding cattle, if you've got cattle in the feedlot, or you're on here and you're working with people that have cattle in the feedlot, it ain't a bad idea to just go ahead and price your corn, get it bought, feed your cattle cheap corn. If it goes down further, it can't go down that much further. I think Aaron kind of showed where we were getting close to the contract low, but we hadn't exceeded it. So that tells me there's some strong support at that level. So what's another 10 cents a bushel lower if there's actually more upside potential in corn prices from where we stand today? I'm not saying that corn prices are going to go up. I'm just saying it seems like there's more risk of corn prices going up than there is of risk of prices going down. So thinking of it from that standpoint, buy your corn today. If you got good forage production, holding cattle and placing them heavier may be the best thing to do, because right now cattle prices are pretty low. More right now, you're in the business of selling pounds instead of marketing cattle. It's pretty cheap to feed cattle, not too terribly expensive. We're still working through some of those cattle that went through a tough winter, and based off this goes through June. July data will come out probably in 2 weeks, but a lot of these numbers still come from cattle that were on feed during some of those winter months when it was just real muddy and sloppy. I expect these cost of gains to go down tremendously with this cheaper corn. Hay prices, alfalfa hay prices are lower as well, so that should help also. Here is the September. Aaron already kind of discussed how these tick marks work. The high of the low that was within a day trading, and you can see here where yesterday we closed the September feeder cattle at 133.73. It's hard for me to imagine for these prices to go lower right now. I think we should move back up into that 138 to 140 range on the September. I think that's what should happen, but is that what's going to happen? Probably not. It's just too short a time frame. So we'll probably settle somewhere above 135 by the time this September contract closes out. We're still trading on the August, but September is my next prevalent. Then this gets us down to November. Again, still trading at about the same place as the September. There's not really any hedging opportunities here. So if you've got cattle, just keep feeding them. Do the production part that you know how to do. Don't worry about at this particular moment. Don't worry about any hedging opportunities because they don't really exist. I just don't see the downside being much greater than what we've already experienced. Fed cattle price, I've dropped a little bit on my fed cattle price forecast. That's probably not that prevalent to most people, so we'll kind of go to the futures-based feeder cattle price forecast. Trying to figure in some basis there, typical basis. So we've actually had fairly strong basis, and so some of these might be undershooting the market just a touch, but they probably won't be by very much undershooting the market. It just looks dismal for cow-calf producers that sell calves straight off the cow in the fall. And then the spring is not the normal spring that we generally see. So we'll see how that plays out. We'll see if I don't imagine if Tyson gets the facility back up and running that it'll have as positive of effect as it had a negative effect. But that kind of gives you a broad outlook for the next 6-7 months on what prices may do and what people may have. So we're going to be struggling with a lower market for a little while longer.